Oh my goodness, sorry, something just went in the way. Just to get us started, talking about our a financial team, like who are the different players on a financial team? What are the different roles that we might need to consider that we're not already? And what are some of the roles that we've heard about? And maybe we need some clarification on what those folks are supposed to be doing. And before we dive in, um, our normal disclaimer, while we are advisors, this is not meant to be investment advice while we're on this call. This is general education and information. So we're not tailoring any specific advice for anyone's particular situation. So just a reminder, when we do these general calls, this is not meant to be investment advice. So let's talk a little bit about the financial team. And I think what's really important to note is that when we are thinking about our financial picture, we probably need to understand like what different parts of our financial lives um, might we be able to get help with in the first place? Because I know from personal experience, I used to consider, a financial professional, someone who just gives investment advice. And so for a long time, like my understanding of a financial professional was very limited to that scope. And it took a number of years for me to realize like actually there's so much more that goes into that. So I think it's important for us to just identify, what are the parts of a financial plan so that we can even understand who is available to help with those parts of the plan, or do you need anybody to help with those parts of the plan to begin with? So we're going to talk through both of those questions for sure. These are a lot of words, and I'm going to kind of talk through what each of these means. But I want to make sure that if you have a question, please feel free to chime in, whether audibly or in the chat. If you're like, what does it mean to have assistance with your cash flow, or what does it mean to actually put together a plan for charitable giving or anything like that? But let's start with cash flow. So that's just, a fancy word for what it looks like when money is flowing in or out. So that means our income, the money that's flowing in, and our expenses, the money that's flowing out. And what you'll hear, which can be really aggravating, in so much of the like financial advice that's out there on the internet is like, and this is what I tell my kids too. It's actually really, really simple, not easy, but simple to think about what kind of financial advice you need to be financially successful. And that means you need to make more money than you spend, right? And that's infuriating because as simple as that might be, that doesn't mean it's easy, especially in today's world. But cash flow represents that picture. How much are we making versus how much are we spending? Of course, the difference is what we're saving. And spend means not just our fixed expenses, not just our large expenses. It means everyday expenditures. And it also means money that we're spending on what we really love. So it could be money that we're spending on our kids, that we're spending on charity, anything. Those are still considered expenses. So when we talk about cash flow, we're talking about the difference between our income and expenses. And that difference, which we always hope to be positive, is our savings rate. So if our savings rate is positive, that's great. The bigger it is, that means that the more we're putting into savings. And then, of course, we get to a point in our lives where our savings rate is zero or negative. And that's actually a normal practice for various parts of our life. But having somebody help with cash flow um, might mean that we have someone who actually is helping us see the picture of what is coming in and what's going out. And sometimes it's not always clear. I think that's a great example of when things aren't always clear, or deductions that we get from our paycheck. Are those expenses, or is that part of our savings? And then also strategies to figure out, okay, well, my savings rate's not where I want it to be. So how can I get it more to where I want to be? So certainly an area where people seek assistance when it comes to their cash flow is not only seeing what the picture is of their cash flow, but also getting help with strategies in order to improve their savings rate. Another vein there is your balance sheet. So not necessarily the money that's flowing in or out, but the assets that we have versus the liabilities that we have. So we might, thanks to the cash flow that we've had over a number of years, maybe we've used our savings to build a certain number of assets. So this could mean retirement accounts, money that you might have in a brokerage account, money that you have in a savings account, might mean your house, it might mean other property, real estate property. So those are all assets. And then liabilities are the debts that we owe. So, of course, we weigh different liabilities in different ways. So, a credit card debt is a liability that has a much bigger impact on our balance sheet than a mortgage, right? We're talking about high fluctuating rates versus usually standard rates and lower rates on a mortgage. So, when it comes to assets and liabilities, it's not always like, we're just giving it one brush look and that's it. We're definitely balance sheets mean that we should be taking a deep look at what are the assets that we're growing? What kind of liabilities do we have? What priorities do we want to place on paying off different liabilities, if any? And are assets located in the right place as far as being able to take tax advantage, being able to use those assets in a certain number of years, being able to use those assets for particular things that might be more advantageous than others. So the balance sheet can be more complicated than it sounds, but again, this is like being able to build that picture just so that we even have a foundation of knowing like what do we need to change about our financial plan to begin with. Where can it grow? Where do we want to make change improvements and things like that? I think that goals is something that obviously this is a very big and vague topic because goals stretch far beyond just our financial goals. And a lot goes into setting goals. So, when we talk about building a financial team, I think when we talk about goals, um, I'm not just talking about like professionals who should help you weigh in, like financial professionals to help you tease out what your financial goals might be. I think that the goals conversation means that we should be having conversations with like people we love and people who might depend on us one day, or people we know we might be needing to take care of one day. The goals conversation stretches far beyond, talking to financial professionals or just talking to our partner or the people that we might be co-managing money with directly. The goals conversation is a big one. So I think that even though this is absolutely a big part of the financial plan, the people that we talk to our goals to about our goals go way beyond the financial scope. And then I've mentioned tax strategy a little bit. Tax strategy comes up all the time as far as where are we investing money, when we're going to want to use certain buckets of our money, what our timeline is, what happens if we're selling a house, like we were just talking about before we kicked off this call. Are we going to have to pay gains on something that we sell? Or if we have an inheritance or if we have a windfall because we're selling an asset, where should we invest that money from the best perspective of tax strategy? So that's a huge part of financial planning that I would say comes in at every stage of life. When we're building, when we're growing, when we're slowing down, when we're withdrawing, tax strategy is it's almost always top of mind. I know for Susan and me. And when we talk about tax preparation, that's actually different from tax strategy because tax prep is the preparation of like filing your taxes each year. So I think it's really important to call those out separately because there are a lot of financial professionals who focus on tax preparation and don't at all focus on the tax strategy. And in their mind, I think tax strategy might be a whole different can of worms and even maybe a whole different job description. Whereas a tax preparer might say, look, my role is just to make sure that you're filing your taxes on time and, you know, you're making sure that you're paying the IRS the right amount of money so that you don't get penalized, and that's where my job ends. So that's, as you could see, very different from the tax strategy of, am I making the most of my income and my assets and my deductions and everything like that from a tax strategy perspective. That can be completely separate from tax preparation. So I do think it's important for folks to keep in mind that you might have somebody on a financial team um, that does tax preparation, but that person is not necessarily doing tax strategy and most likely not doing tax strategy. And then business planning, if you run a business or want to run a business, what's the best structure of that business? What's the best way to pay yourself? What's the best way to plan for expenses in that business? So that's clearly a big part of financial planning. Um, Charitable giving is is a really huge aspect of a financial plan because it honestly doesn't only come down to the type of legacy that you want to leave or how you want to give to the world, but also it plays a lot into tax strategy. So, for better or for worse, our system is built in a way that there can be some pretty heavy tax advantages depending on how you give to charity, especially with some of the new tax laws. So that's a big part of financial planning. It becomes a strategic piece, I think, for a lot of folks. Um, and then investment management. So like I was saying before, this is what I thought of was as financial planning. Like I used to think, okay, if I'm working with a financial planner or advisor, it's because they're giving me they're doing my investment management. So what does this mean? Like someone might say, hey, I'm gonna help uh, take custody of your assets, or I'm going to help like take a look at the funds that you have and give you advice on maybe how which funds to invest in instead, and I can actually manage those funds for you. So this can range. Investment management is a broad term where you might have someone who's helping you with a passive investment management strategy, which is something that Susan and I are big proponents of. Having kind of investments in low cost, long term buy and hold geared index funds is often, we think, a great way to go. But there are some investment managers who say, actually, like I feel like I can beat the returns for you on so many of those indexes. It's going to require some more uh, buying and selling on a constant basis. So there's a little bit more active management going on there. And I'm not saying that one way is right or wrong. I just want to spell out that there are multiple strategies involved when it comes to investment management. And it doesn't mean that you're hiring somebody to do that. The majority of folks out there do their own investment management and they choose their own strategies. And there every day you can make the choice, like how important is it for me to beat the market by this many basis points versus how important is it for me to stay sort of in line with market returns and know that I don't have to be putting a lot of time into my investment strategy. Whereas some people are like, you know what, I'm not consistently getting close to market returns, so I'm doing something wrong and I want help with that. So um, and then education planning. Uh, Education is very expensive these days. So a lot of planning has always gone into education, but especially these days, that's a really huge part of a financial plan. So you might have education plans for yourself, for a partner, for your kids, for other dependents. You might want to be helping out nieces, nephews, friends. And there are opportunities for education-focused investments that have certain tax advantages. And some people feel that that's too limiting. There have been a lot of changes recently that have made um, like 529s more flexible. I know when I um, was preparing to have our first baby a little more than 10 years ago, we were looking into 529s, and honestly, we felt scared because we thought it was such a limited scope for how the funds in a 529 could be used. And we were like, what if she doesn't want to go to college, or what if she decides to do X, Y, and Z instead? And what if we want to help, seed some sort of a business that she wants to start or something like that? And we felt like a 529 wouldn't give us that option, but actually that a lot of that has changed. So there is more flexibility now, but there's a lot more to keep in mind. So that's a big part of education planning, as well as just being able to plan for the inflation, not only of, you know, um, of our normal costs, but also of college. College is inflating at, unfortunately, pretty high rates. So being able to project that and understand how much would be needed if my child or my dependent were to go to this type of school for how many years, and what would that payment need to be, and how can I fund that payment? So that's a big part of people's financial plan these days. Um, Same is true for retirement planning. And I would say that the nuance for retirement planning is we have so many different options, lots of different types of accounts that we can invest in for retirement. We have a lot of choices to make long before retirement about, do I want to be taxed on that now and therefore not taxed on it when I take the money out in retirement? Or do I not want to be taxed today and take the savings that I would otherwise get on that tax bill and be able to invest that savings? So, um, and then, even beyond like that pre or post tax decision, there are just so many different account types that we have that are for retirement. And of course, strategies about when do we take that retirement money. We have to keep in mind required minimum distributions, which, we start getting hit with for any of our retirement accounts that we haven't already paid taxes on. And so lots of implications as far as taxes go when it comes to retirement planning. Risk mitigation is something that insurance is like a big part of this. I think that that's also actually, I will share that my personal take on working with financial professionals was that I learned quickly that a lot of the financial professionals that I had interacted with, they had pushed me onto different life insurance policies, and that really soured my experience in working with financial professionals. And it actually played into me not wanting to pursue a financial designation for a long time because I was afraid to associate myself actually with advisors who do work also as insurance brokers or agents, or who make it part of their business model to get commissions from different policies that they might sell. And I want to clarify, there's so many things that I want to clarify, but one is that there are so many financial professionals out there now who clearly say, like, I am fee only, I don't get commissions, I don't sell insurance, and they, partner potentially with other insurance agents or brokers who they know about, who they believe do um, trustworthy work. And also, I want to be fair and acknowledge that there are financial advisors out there who do get commissions from insurance products. And I think some enter into that role because they feel like insurance can save people's lives, and they're not wrong about that. Insurance can absolutely save people from financial ruin in more ways than one. So I don't want to knock insurance. I don't want to make it seem like I'm anti-insurance. I have term life insurance. Health insurance obviously is insanely important. I think that insurance absolutely has a big role to play in all of our financial plans. disability insurance. I should mention that too. Um, but I just wanted to share, my evolution of thinking as far as what I thought a role of a financial advisor was when it came to insurance. And I used to think, oh, all financial advisors are trying to sell me insurance. And that's certainly not the case anymore. Certainly, there are many financial advisors who also sell insurance. That's something to be wary of when any advisor is trying to sell you something. But I also, to be fair, want to state that that doesn't mean that it's an advisor who doesn't have your best interest in mind. I do believe there are many advisors out there who are believe 100% that insurance can save people's financial lives, and that's why they sell it. So,
I will
uh,
say the only people I've known who have benefited from whole life insurance are the insurance salesmen. Like in general, whole
yeah,
life insurance tends to be a really bad deal for most people. So
right. Um, like I said, term is I do own
term is good.
insurance
Yes.
and I have term insurance. And again, we're like, everybody's situation is really different. Susan and I have had so many interesting conversations about life insurance and annuities. And when it comes to annuities and whole life insurance, I think it's a very, very specific scenario where somebody would actually benefit from buying one of those policies. And that's not something that we have to get into now, but I totally echo what Susan says is like I tend to have like an ick feeling when it comes to whole life and
Yeah.
annuities, but I don't
And
want to just say it's bad all across the board because there
right,
are some
right.
specific scenarios where it makes sense.
But they do, both of those products do have big commissions attached to them.
Oh
Um,
yeah.
one of my relatives went to his financial advisor and he wanted to put money in a CD, right? Just a very safe, almost like a savings type product, right? And even though he has a really big pension, so he has income coming in, his advisor sold him an annuity, which he didn't need. He didn't need the income from it, but that advisor got a huge commission off of it. And so I think you do have to be really careful about that when you're being sold whole life insurance and annuities. Like Caitlin said, for some people, they can be the right product, but for a lot of people, they're not, but they're a great product for the financial advisor or insurance agent who's selling them to you. I mean, these commissions are like tens of thousands of dollars on these products because they last so long, right? It's something you're signing up for potentially the rest of your life, right? So they may be getting like a $50,000 commission off of this.
Yes. It totally. And then I mean, just not that this is a presentation about insurance, but because we're on this topic and because like our focus is to be, to be able to actually educate and talk about some of these topics. Um, when we're talking about life insurance or annuities, which is actually more like death insurance. So life insurance is a way to protect income or a role of care that somebody is playing. So I'll use myself as an example. Um, I Susan and I have like started this business. Although to be honest, we're, still in a phase of our business where we've done so much transition and it doesn't like generate a lot of income. So as far as an income perspective, I don't feel that I have a lot of income that I need to protect on myself. Whereas if I was making $500,000 a year, I'd be like, okay, my family might be depending on that 500,000 a year that I am raking in, and I want to protect that income. And I might take out a life insurance policy to protect that income because if my family's relying on me to make that income for the next 15 years and I die tomorrow, then where does the rest of that money that my family was relying on come from? And that's where a life insurance policy can kick in. But it's more than just income. It's also if I am the primary care provider to my children, um, yeah, if I'm not getting paid for that, it doesn't matter because if I'm not around tomorrow, somebody else has to provide that care to my children, right? So you also have to put a number on that. What would, if, let's say, my husband had to hire somebody else to provide that care to my children throughout the summer, before and after school. what would that look like? And to put a number on that is really important because that's also something that a life insurance policy should cover, right? Um, so that's covering me in the case that if I were to die tomorrow, what would it cost to hire somebody to care for my children or to replace the income that I have? Now, when we talk about term life insurance, my policy covers me for a certain amount of years, and that's a term. And what that means is that I'm paying a premium every month for the next 15 years. And then after 15 years, if I don't die, then we don't get any sort of payout on my term life insurance policy. I'd no longer have to pay premiums, but I've just paid premiums for 15 years and I didn't get anything. But that's good, right? I don't want to die. So I don't want my family to get my life insurance benefit within the term that I've paid for. But term just goes away after that. Whole life is when people can pay into this idea that they can be covered for their entire lives and they can have access to the money that they've put into their policy throughout their life. So, for example, if I didn't have term and I continued 20 years from now, and paying my life insurance premium, I might decide that I want to take out a loan from my life insurance policy in 20 years. And my life insurance policy has a formula to determine, okay, based on everything that you've paid, how much do you have access to take out as a loan? And it's not just the face value of what I've paid, but it's also how has that been invested, taking some returns from that. So I'm probably going to have access to a loan of more than just the amount of money that I've put in over the life of my loan. And and people really like having access to that. They also like the idea that the premium that they're paying can actually be invested and generate some returns for them. What I will say is that those returns are never ever going to be as good as a return that you can make by taking a hypothetical premium and investing that every month in your IRA, in your brokerage account, whatever, even just like
Yeah.
investing it in a low cost index fund.
Right. You'd be much better off probably just putting that money in the stock market and then borrowing against it as a securities based line of credit. And we have a question in the chat about the indexed universal life insurance policies. And so the way those work is technically, yes, your premiums are invested, right, in the stock market, but they cap that growth. That's normally capped like 8 to 10%. So if the stock market goes up 25%, you're still only making 8 to 10% on your money. The benefit is they cap the loss at zero, so it won't go down, but they also have high fees on them. And even though, yes, you can borrow against it, you would probably be better off just investing in the stock market and borrowing against your portfolio there than investing in indexed universal life. Again, it's one of those products that typically has a lot of commissions attached to it. And also with that one, your premiums do tend to rise a lot as you get older. And so I think part of what they bank on with these lifetime policies is that at some point you're not going to want to be spending, $2,000 a month for your premium, and you're just going to drop the policy, and then they'll just get to keep everything that you've paid. There'll be very little that you'll actually get to cash out of that policy. So that's how they make money off a lot of these, in addition to the commissions. So in general, I mean, indexed universal life would probably be only worthwhile if you had already maxed out your 401k contribution, your IRA contribution, your HSA contribution. And even then, I think probably just putting money in a taxable brokerage would be better than going for an indexed universal life. Caitlin and I have had to help a lot of women get out of different types of whole life and term or indexed universal life insurance, regular universal life insurance policies. And it is very tricky to get out of them once you're in them, and you usually get very little money back. We worked with a client. She had the policy. I think someone had given it to her as a child. And so she had this policy for like 60 years, and she ended up getting $8,000 back out of it. when she canceled it, and way more had been paid into it than that. So a lot of these things, I mean, it is to make the salesperson money. So just be careful that you know what you're getting into when you sign up for these, because a lot of these salespeople are very persuasive. And so just make sure you know all the details before you sign up, and you know exactly why it's benefiting your particular situation.
Yeah, and I should, to be fair too, we mentioned, you can have this bucket of money that's available to you to take out as a loan, based on the premiums that you've put into a policy, for some of these plans, including an IUL. And that, when you take out a loan, you do that tax free. So that's a huge advantage to folks who are trying to, they might have very high income, or they might be in a position where they want to take out a lot of money from their policy without being taxed on it, and that can be a really big advantage. Of course, that's your life insurance policy, right? So if you take out a huge loan like that and then you die the next day, your benefit is going to subtract the amount that you've taken out in that loan. But I don't want to omit the fact that that is a perk to many people, is the tax-free nature of being able to have access to that loan. But it's just important to keep in mind that that is money that you've put in. And you could do the comparison of, okay, if I put that the same amount of money over the same amount of years into a brokerage account or a retirement account, how much would I have access to as compared to my life insurance policy? And you're, like we said, almost always going to have way more money in your retirement plan or your brokerage account. And one thing that a lot of proponents of whole life insurance will argue is, yeah, but you have to be disciplined enough to put that much money away. So sometimes I liken this to, like, are you someone who can say, I don't need to pay money to go to a gym or to, like, take classes. I can just be disciplined enough to, like, wake up every morning and make sure that I'm doing my workout. And then you could save a lot of money that way. But I actually am someone who I really like going to classes and stuff like that. I'm going to pay more money going to those classes. Like, I'm paying a premium. I know that. For me, I'm getting like a lot of benefits out of it. I think for life insurance, in my mind, I'm not justifying all those benefits, but it's that same argument of, like, can you be disciplined enough to save and put that much money into, a brokerage account? Whereas, if you feel like you can't, if you instead put yourself accountable to having to pay a life insurance premium, then somebody is investing some of that and they're taking away a lot of fees, so you're not going to get the same returns. But that's an argument that you hear a lot as well. So, and if anybody has questions about that too, or anything else on this slide, the last thing here is estate planning, which is a big deal. This is not just like estate, meaning like, oh, you have so much money in your estate and you need to plan, and do you want to have your name on a campus building? This is estate planning means also just who takes care of your children if something happened to you tomorrow. What happens to your car, like, what happens to the personal items that you care a lot about. So I want to encourage you all to move away from the idea of, oh, estate means, like, you have this big, fancy, highly valued estate. It is the estate plan as a term and as a role in your financial plan, is not reserved for folks who have tons and tons of assets at the end of their life. This means anybody who has a responsibility for other life, who has in their possession meaningful things, to either themselves or to other people. I think an estate plan is important to nearly all of us. So
Yeah, and it's not just putting together a will, which everyone should have. Everyone should have a will and power of attorneys, um, what your medical desires are, but it's also, even if you're not in a position to be able to do those things right now, setting up beneficiaries on your accounts is super important. Because if you set up beneficiaries, usually that money can avoid probate. So if you're for some reason very like anti-will and you're like, I'm not going to do a will, at least set up your beneficiaries on your brokerage account, your retirement accounts, your bank account, and then that money can pass to whoever you want it to go to, usually without having to go through probate.
Yeah.
So that's um,
Free, free
5 minute thing.
DIY.
Yeah,
Yeah.
just knock
Yeah.
that out. Low
Just like
hanging fruit.
and if you have kids, make sure you do have a custody plan for your
Right.
kids. So what do I need a team to do? Like I'm gonna return to that list of things on our financial plan. And by the way, if you I'll go back to it in a minute and I'll link it to potential people that you can hire or work with when it comes to helping you with each part of those of that financial plan. But I do want to invite you to share anything that's on your mind if you didn't see it on that list, or anything that you have questions about that you didn't see on the list. Please don't be shy about chiming in. But I want to first, before getting into like who can help you with what, I want to also state that there's no like right or wrong way. Like you should be hiring somebody for this, you should not be hiring somebody for that. Like um these are all very much just like guidelines, opinions. And Susan and we often have different opinions from each other, but even if we share a common opinion about things, that doesn't mean that's the right thing to do. And that doesn't mean that if you have a different opinion, that's wrong. So I do want to say that you can literally DIY all of those. You can DIY none of those. There are, and when I say DIY, that also is open to interpretation because your definition of do it yourself might be, oh my gosh, I have this very intricate budget and I manage it every single month. I am absolutely tracking all of my transactions. I am tracking every penny that is coming into my account every month. That's someone who is a big time doer, but you might be DIYing your cash flow by saying, I feel good. Like I'm looking at my checking account every month. My credit cards are getting paid. I know there is money that I've set aside to just automatically go to savings. I know I'm keeping a certain threshold in my savings. Some amount of money might be going to my brokerage account. Some amount of money might be getting deducted from my paycheck and that goes into retirement. So I'm good. Like that's my version of DIYing my cash flow and I feel good about that. And I don't need to like paint this big elaborate picture or look every month at what my balance sheet is. So this is not meant to make you feel guilty if you're like not keeping detailed records about all these things. So please feel free to say, look, I'm feeling good about that. I don't have anything in writing or I don't have any intricate records about most of this stuff, but I know where it is. I know I feel good about it. X, Y, and Z is not happening. Like I'm not failing to pay my credit card every month, and I'm not failing to contribute to retirement or some sort of future fund for myself. So I feel good. And I want you to not feel stressed if you're in that situation, because I think that's also a great tool, a great system. But I am also saying that you might feel like as things evolve, you do want help with something, or as things evolve, you've been getting help with something and you no longer need help with that thing anymore. Um, so there absolutely are financial professionals that you can hire, you can seek the advice of, you can do it on a temporary basis, on a one-time basis, or on an ongoing long-term basis. And I have in here that often people hire more as they grow. And I think that tends to be like the more common pattern, but also that can just really fluctuate as well. You might get to a point where, oh, you've put kids through college or you saved and purchased your primary home and you're good and like you have the rest of your savings goals figured out. So you might feel like you really had this big goal and it felt complicated to work through it and you hired somebody, but now you're like coasting and you might be in a position where you're feeling like, you know what, I'm good. And I don't necessarily need the same help that I've been having. And I also want to say that there are some advisors, and we'll talk more about this here in the next slide. like some there might be some advisors or planners or financial professionals who have the same title but do a lot more work than others might do. So that is not a good or bad thing necessarily, but that's something to keep in mind too, as far as who who you're hiring and what they might be able to help you with. So
And I
this,
will say, I've always been very like pro DIY in my life, but as I've seen more situations and I've gone through more financial situations myself, I can definitely see where it's helpful to have financial professionals. And one of those is as you get older. I have an older relative, and she just wasn't able to stay on top of her money as much, and she became very vulnerable to scammers. And that was a point where it was like, okay, you need to have a financial advisor who's actually watching your money and making sure you're not standing at the Bitcoin ATM putting all of your money into it, right? Because this has happened to some of my friends' parents. They've gotten scammed into these things. And so I think that's definitely a good time to get a financial professional involved or have a relative that's also watching your money. And then also just thinking about my own financial investments. I've always been very proud of doing everything myself, but I'm also like, oh, there's some really bad investments that I got into that I would not have gotten into if I had been working with a financial professional and just had like a second set of eyes on that, right? For them to say, oh, this doesn't seem quite right or legit or like this is going to make any money. So I think it can be good, even if you feel pretty good about things, to even just get that second set of eyes on things, even if it's just like a once a year, like couple hour meeting with somebody. It doesn't even have to be like an ongoing thing. Especially if you're looking at investing like a lot of money, like in a private placement deal, private equity, a big real estate deal. Like if you're putting a pretty significant amount of your savings into something, that can be a really good time to talk to someone and just get a second opinion on that. And you would do that, right, if you had like a health issue, right? A lot of times you'll go, if you have some major diagnosis, you'll go get a second opinion from someone, right? And I think that can help also in your financial life too, right? If you're about to spend $500,000 on an investment property, maybe get a second set of eyes on that, right? And I think that would have helped me a lot in my own financial life, to not make some of the mistakes that I ended up making. And we're actually, our next month's Wealth Wednesday is going to be Caitlin and I talking about some of the mistakes that we've made and what we would do differently, just to tie into that, give a little promo.
yeah, I totally agree. I think also, I mean, when it comes to money, it's it's always emotional. And even when we're like, we feel super organized and we're like, okay, I did this and I did this. So the next step is for me to do that. I think there's always room for us to just like make a decision based on our emotions. And so I do think that that's where having a financial professional in your life can be really helpful. It can kind of keep us in check, which sounds to me like I'm the kind of person who hears that and I'm like, oh, that's kind of a bummer. Like I like the idea of having like room for emotional expansion in life, and which comes with a lot of error too. But if I were to like go back to some of those mistakes that I have made in my life, which I don't like spend a lot of time dwelling on, there are certainly things that have happened and I've moved on. But I do know that if I could have pointed to like if I had actually talked to somebody about that, and if they had asked me the right questions, I think I could have gotten to a much different place and not made some of those decisions and felt still good about it, not felt like, oh, I always wonder what would have happened if I could have done that. So I do think that just because we're humans, no matter what like AI might be able to come and do for us, like we still have a massive like emotional driver that can influence us to make certain decisions. And I think it's always good to have another human to talk through those with. Um, and also, I will say there are certain things that I have loved offloading, including the bookkeeping aspect. of our rental business and not having to file my own taxes is actually like I love that we have a CPA who just like takes our paperwork and I can just review what they did for us and not actually having to step through every line of every tax form for me is like so worth the money. But okay, so this slide is these are not like end all be all answers. And you'll even see like financial coach up here. This is also something that a financial planner would do for you. And I think, in my opinion, should offer as well. But this is something like that Susan and I have just transitioned from financial coaches to financial planners and running an advisory, which we didn't have the option to be able to like advise at certain levels before when we were financial coaches, but the cash flow, balance sheets, goals, like that was our bread and butter. And actually, that there's so much, I talked about emotion just now. There's like so much of that in that first piece. And I can speak to my experience. Like, that's why I love this part of the financial plan so much. It just like really can crack open, what people want out of life. Like what are their biggest hopes, dreams, fears, and then what is the actual like roadmap that is currently happening? What's like preventing some of those hopes and dreams? What's enabling some of those fears, and just being able to work through those. I love that part of the financial plan. Um, and there are so many financial coaches out there. I think that they are really good at being able to empathize and tease some of that information out. And then, of course, there's more to a financial plan than that, which is a big driver for Susan and me. And that's why we wanted to transition our business. And that's why we love that as advisors or planners, which I'm using those terms interchangeably. I will say, someone who's putting together a financial plan, like they need to be looking beyond an investment portfolio. A financial plan should be all encompassing. It can't just look at, okay, let's take a look at what's in your stock portfolio. So it really has to look at your goals, the life that you want to live, the life that you want to design for the future. That needs to come first, and then looking at your cash flow and your balance sheet and your tax strategy and everything else that you're doing to contribute to that plan. And the portfolio is just such a small part of that. So a financial planner should be able to look at all of those pieces, even if a financial planner is not someone who's going to say, I'm going to go do your tax prep, I'm going to file your taxes. Your financial planner should still be able to look at your tax strategy. They should be able to review your previously filed taxes and say, okay, this is what we need to change. This is not aligned with the tax strategy that we talked about. And so I just wanted to make that clarification between a financial planner and advisor, because often a financial advisor is someone who is advising you on your investments. But sometimes that term is used interchangeably in the industry. So I wanted to make that clarification there.
Yeah, if you're working with someone at one of these big firms like Raymond James, Edward Jones, typically they are a financial advisor, right? And so they are pretty much just looking at your stock portfolio and managing what investments you have in that. They're not doing full financial planning for you, right? The rest of your life, your other investments, your retirement, all that kind of stuff. So there is a pretty big, like Caitlin said, distinction between someone who does financial planning for you and is putting together your whole life financial plan and someone that's just a financial advisor and they just have your stock portfolio and they're just dealing with your stocks.
Yeah, that made me think I should probably jump to this slide, which is specifically like what a financial planner does. And again, some of this might go back to like my personal experience when I was starting to look into, okay, maybe we're really like driving towards these specific financial goals. Maybe we should have somebody help us with this. And then my experience wound up being working with a lot of advisors who didn't really get what we wanted. Like I just kept feeling like we were getting advice that conflicted with some of the things that we wanted. Um, and then later on, I learned, okay, there's actually a difference between what a financial advisor does and what a financial planner does. And so this is, if you can make sense of some of the my icons here, there are things that a financial planner, there are financial planners out there who also have a certification that allows them to prepare taxes, like Susan, even though she doesn't necessarily prepare taxes, but she's like Susan has her EA. And there are financial planners out there who also have law degrees, and they might be able to draft up estate contracts and documents. And so there are financial planners out there who can literally do all of this. I would say this is more of like I wrote in here kind of the typical path of financial planners. That most, I would say, most commonly are the ones who can work with you to identify like what it is you want out of your estate plan, where you want things to go, what are the best ways that um, we can allocate some of these assets in the most tax advantaged way. And then once we have that design figured out, that's when we go and work with the estate attorney who can make sure that like we're drafting these documents up and they're giving it another look to make sure that this is going to benefit the client in the best way. So a lot of times the financial planner is referred to as like the quarterback, which I hate that reference. One, because not everything has to be related to football, and two, um, the financial planner is not just like handing everything off. They are actually owning a lot of your financial plan with you, but there is a lot that they actually have to, as fiduciaries, say, you know what, I think that we have this really complex tax situation that even though we're experts in tax strategy, this particular thing requires a different professional to weigh in. So you know, we can recommend professionals that we think that we can work with to help you figure out the best solution here. So often a financial planner will be able to identify those situations to say, okay, this is, we've got this down solid, but there's this one area where we should probably get some additional expertise. So it is the financial planner's job to do that. And like as fiduciaries, it is up to them. And Susan and I, as fiduciaries, it's up to us to always make sure that like if there's something that we think we can't solve well and somebody else with a different credential or a different line of work is able to solve better, then it's our responsibility to highlight that and help the client work with that person.
Something funny we hear sometimes from some women is they tell us, "Oh, I need to get my finances in order before I go to a financial planner." And it's kind of like, "Oh, I'm having a heart attack, but let me just see what I can do about that before I go see the heart doctor."
Yeah, or like
Right.
cleaning your house before a cleaner comes.
Yes, I'm guilty of that. But yeah, and so the financial planner is going to help you get your financial house in order, right? So you don't have to be embarrassed, right? And feel like, oh, I need to have all this in order before I can even go to one of these professionals, right? They're there to help you get everything organized, help you feel confident and empowered, right?
I know we're at our time. I wanted to, I feel like it's important to cover, touch on cost. So, um, I wish that there was just like one set answer for you, but I will tell you honestly, so much of this varies. You might hire different people to fill different gaps in your financial plan that you feel like you want help with or you can't DIY. And so a lot of that is going to be kind of like a la carte pricing. And also each professional might charge differently based on their model. It's pretty common if somebody is managing your investments for them to charge a fee, like some percentage of that total amount that they're managing. However, there's also uh, professionals who will say, I have a flat fee, and that flat fee might change based on complexity of this job, but the flat fee is going to range between this much and this much. So no matter how many assets I'm managing for you, or even if I'm managing any assets at all, it's this flat fee. And then sometimes it's project based. So if you're like, I just need help with this one thing, and that person will work with you to define the scope of what that project is. And then you get charged for the amount of time. Maybe they're charging you hourly. Maybe they're like, this is what we think that it will cost. And they give you a flat fee for that. Um, and a lot of times it's an ongoing engagement. That tends to be how Susan and I work is we like to work with clients in an ongoing fashion, although we do project-based work as well. So if somebody comes to us and they're like, I'm not necessarily looking for a long-term planner, but I have this weird thing that came up, like I'm about to inherit this much money or something like that. And it might be a situation where we could say, well, we can define like what we're going to help you with and just do that on a project basis. So like this one-time deal and not necessarily have it be a long-term engagement. And then last is just who can you trust? Some things to look out for. I know we kind of highlighted some scary sounding things in the beginning when we talked about insurance and people taking commissions. And selling insurance is an example of selling a financial product. Some advisors, they have funds that they are incentivized to sell. So you might be like invested in a total stock market fund, like index fund, like VTI. And you might work with an advisor who's like, actually, I make money if I sell this fund that pretty much also tracks the total stock market, but I'm getting commissions the more people I sell that fund to. So they'll say, hey, I can, I can manage your portfolio and I'm gonna advise that you get into that fund instead of VTI, and then they get some extra commissions on it. So it's always just good to look out for, be aware, so you can make your own decisions. And you might decide, yeah, I get it, they're selling that product, but actually that's going to benefit me too. So that's who I want to go with. So it doesn't mean like avoid those people at all costs. You make your decision, but that is something to look out for is people who might also be selling different financial products. They might be incentivized to sell to you, people who might get transaction fees. And so therefore they're incented to sell a lot of your funds, like buy and sell over and over. So they get more transaction fees. So look out for fiduciaries, people who are bound to have your interest in, you must place your interest first and foremost before their own. They're not trying to sell you their products, and they actually are looking at more than just your portfolio. They're looking at your whole picture, and not just like the one time, oh my gosh, what do we do about this one thing? And then I want to say that it's important to be able to feel open and like you can talk to someone and be vulnerable with them. Just going back, I feel like you can't take emotion out of money. We all have our own baggage. Often we're managing money with another partner. There are family members involved. And I just think it's so important to work with someone not only you can trust, but who you feel comfortable with, who you feel like you're not being judged if you have certain fears or opinions or if there are emotions that are taking over, which inevitably happens when it comes to money. So
Yeah, and don't be afraid to ask questions. If you have questions about fees, ask those questions, right? If you don't understand how something works, don't be afraid to ask that. I know, some of my worst investments, I felt intimidated and I didn't want to look like I didn't know what was going on, right? And so I didn't ask the questions that I needed to ask, and I ended up losing a lot of money. So that's, I feel like a big lesson I've learned is don't be afraid to ask the hard questions. And if you're working with someone who is shady, you can probably tell at that point, right? They're going to try to evade your questions. They will talk down to you, and that's someone that you probably don't want as your financial partner, right? And so, yeah, just don't be intimidated. Like, don't just ask what you need to ask, right? And don't be afraid of not knowing something.
if you do have questions, even if I know we've worked with a lot of women who are like, hey, how somebody is charging me this, like how is that working? And we've had questions pop up like that all the time. But yeah, if you have questions or if you're curious even about how we work, and you're curious about whether there's something that is going on with you that we can help you with, this is a link to our free strategy session that you can schedule. You can always reach out to us via email. And I know that we're a few minutes over, but I wanted to just open the door again in case anybody has questions that they want to chat about. If you want me to return to another slide, or if you just want to share an experience that you have either working with an advisor or another financial professional, something that you learned that might be relevant to the rest of the group. Thanks, Isabel.
Oh, we have a hand raised.
Uh, Go for it, Naisha.
Hey, I just had a question about your free strategy session. I actually signed up for it and it's in a few weeks, and I just wanted to know, like, I know it sounds like the first one will be kind of just like exploring and seeing what the heck is going on. But what do you offer beyond that, or do you not, or like what happens after that?
Oh yeah, that's a great question. So, I mean, it totally depends on what you're looking for out of the strategy session. After that, if there's an opportunity, if like we both find that there might be a chance for us to work together, that's where we kind of go through the intake process, which again is not like a commitment, but more of a sussing out like what do you need help with, specific situation, specific details, and then we share, we talk on that strategy call about how we work too, so that you have an idea of what our process is, our fees, what does it look like to engage with us either as a one-time or project base or a long-term deal. And then so from that call, we really dive more into details to just say, okay, is this the right fit? Is this definitely something that we can help you with? And then if so, then we start the path on our engagement. And if not, we will let you know if like this is actually we know of somebody else who's really good at being able to help with this particular thing, or we might talk through if we think that there's just a better solution for you in general. So that first strategy session is just to be able to talk through and identify what is it that you're looking for, what is it that you need, could it be the right fit, and if so, hypothetically that's what it would look like to work with us, and then from there we flesh out more of the details.
Thank you. And then it sounds like if it's a good fit, we the client would be working with the both of you, correct?
Oh yeah, that's
Yeah.
also a really good question. So yes, this is one of the reasons that I know a lot of Susan and I have become friends now with a lot of other advisors who are also independent, practice similar models to us as far as like being fee only fiduciaries. Um, and a lot of them are work on their own, which is awesome for them. I am always really grateful that I've got Susan to bounce ideas off of. But also we think it's important to be like pretty well-rounded. So even if we're not on every single call together with you, the way that we work with our clients is always making sure that we're like signing off with each other to make sure that, do you have anything to add to this plan? Do you have anything else to bring up here? So yes, it's definitely a multi-mind operation.
Yeah, and Caitlin and I like to play devil's advocate with each other too. So if one of us has a particular opinion about something, we'll run it by the other one and get feedback to make sure we're all on the right track.
Yeah, I appreciate the like you talking about when you were talking about life insurance, just like the pros and cons. It sounds like in general term is going to be the best, but for you to at least point out like these are some of the things that people do like about it is good. Because sometimes you get people who are so one-sided and then you question their motives. So,
Mhm.
yeah. Thank you.
Yeah, totally. Thanks for bringing that up. Well, thanks. I don't see any other questions in the chat. If you think of something that pops up, you can always reach out to us. And I just want to say thanks everybody for participating today. We look forward to having you next month as well, where, as Susan said, we'll share some of the big financial mistakes that we've made. And we always welcome audience feedback there. But yeah, hopefully you'll join us for that. And thanks again for being part of today. We'll talk to you all soon.
Thank you. Bye.
See ya.